Hello, welcome back. So the bloodbath continues, it looks like, and we're gonna take a look at Upstart Holdings, a very well-known lending platform, which after reporting earnings, it's now down 44% after hours. Absolutely insane. The company used to have a stock price of about $77 and tomorrow is going to open up at about 43, 42. We'll see what's going to be the final price, but it's absolutely decimated. And it used to be $400 quite a while ago. Actually, not even a while ago. It was like a few months ago. And so you can see the whole story here. A relatively recent IPO, which has gone almost back to IPO days, if not less. Tomorrow, we'll see. Wow. So let's take a look at what happened. We can always take a look at the news, at the stock news here for Upstart. I have opened up some articles here so that we can examine what happened. So here's what goes with Upstart. They delivered their seventh consecutive profitable quarter. It looks like fourth straight quarter with triple-digit year-on-year revenue growth, which is nice. Triple-digit year-on-year revenue growth is absolutely amazing, of course. With this year shaping to be a challenging one for the economy. I think I was reading at some point that the CFO mentioned something about the recession. He actually said the word, and that's not great to say. Maybe that actually played a little bit of a role in the reaction. And shares were trading lower by 41.77%, almost 45, 50% down. We'll see where it will end tomorrow. But Upstart reported quarterly earnings of 61 cents per share, which beat the analyst estimates comfortably, actually, by 10 cents over here. The company also reported quarterly sales of 310 million, which also beat estimates, again, kind of comfortably. The estimates were about 300 million. They see second quarter sales as low as 295 or as high as 305, which is less than the analyst estimates here. And they see fiscal year 22 sales about 1.25 billion, lower than the analyst consensus of 1.4. So there is a little bit of suppression in terms of expected sales here for 2022, it looks like. Now, the other thing that I wanted to mention is this article here, which is also interesting because it talks about the future outlook and the CEO's remarks here. So forecasts its revenue to fall between, what we examined here in comparison to the anticipated 335 million. And despite dovish outlook, the CEO remains confident that Upstart can navigate the current headwinds. And he said what I mentioned earlier about the triple-digit growth and the seventh consecutive profitable quarter. However, the stock has been absolutely decimated, 44% down, insane. So after we're going down that much, I want to examine what the current financials of the company are and whether this could be a potentially interesting buy, because again we are opening up at about $43 right now, and so I want to run this through my stock evaluation tool here and also take a look at the key metrics, see what's going on with the company and the financial statements as well. So the P ratio is sitting at 53.9. Of course, this will go down after this massive slump here. But the price to free cash flow 41.6, and outstanding shares have been increasing a lot. I think I was examining this company some time ago. They actually issued a lot of shares on their IPO day, and after that it has been a little bit more, but for the most part steady. But they did issue shares from the IPO day and on, which was recent, by the way. And a little bit later, after the IPO day, actually, I was looking at it. So the free cash flow to total liabilities ratio 6.61. This is a little bit more than you would like, but it's probably fair. We'll examine the financial statements later. The great thing about this company is the revenue growth has been increasing nicely. Of course, the company is not making tons of revenue, so you would expect that. 5-year net income growth, 1,900% over here. So massive net income growth as well. Great to see. And the total equity growth of the company also increasing, but remember, a lot of outstanding shares have been printed, so the company has gotten quite a lot of money from investors. Now, the debt to equity ratio is not very high. It's okay that is debt compared to the equity that the company has. Typically, we want this to be less than 1. And overall, the return on equity is pretty nice over here. Net income margins are fair, so the company is looking fair. But let's see what's going on in terms of the financial statements and see these things in a little bit more detail. From 55 million to almost 840 million over here in fiscal year 2021, and net income that has been getting into positive territory, and I love to see that, of course. Very, very encouraging thing to see, of course, the company getting profitable. Pretty soon that is also, after the IPO it looks like. And as well over here, the total equity has been increasing. Remember, additional paid-in capital that the company has been making because of selling shares, especially when the stock was high, stock price. And net income again that has been increasing, and this breaks down to net cash provided by operating activities over here. Very fair. Investing activities has been a little bit negative over here. The company has been buying some investments and investing in PPE, property, plant and equipment. And also cash from financing, a little bit of debt here. So actually the company has been financing themselves, as you can see, and also issuing some shares in the past couple of years. Now the company has also just a little bit of cash stored right now, 1.2 billion, not bad, and free cash flow that gets increasing, gets increased from 9 million to 153. Another great sign to see from a company increasing their net income and their cash flow as well. But we want to examine whether the company is overvalued or not, because that's very, very important. And remember, if we go back to our stock analysis chart here, you will see that the company is a $6.5 billion company. And so if we take a look at the stock evaluation tool, now they actually suggested that revenue growth is going to be in the triple digits, but we will obviously go much, much lower than this. Let's go still pretty high. Let's go 25, 27 and 29. The company has been achieving pretty awesome revenue growth, but let's just go with this and see what we get out of this one. Net income margins that used to be negative, now they're getting into positive territory. I absolutely love to see that. They may be suppressed a little bit, it looks like, so I'm gonna go lower than the last one, 5, 7 and 9. And the free cash flow margin, again, I have to get the positive years here, and probably this one is the most normalized. So I am going to go something like 90, 100 and 110 here, and an annual return of 13% is what I want to make out of any single stock, because I can make 10% out of an S&P 500 ETF normally, unless the stock market keeps crashing like that, as it's crashing today. Although no, 10% is actually including crashes as well. So if we hit calculate, you will see that right now, obviously everything is red because the current price is 77. But remember, that's not the current price. The current price is actually about 44 right now, or 43 maybe. So we're very, very close to this high value over here, which has a revenue growth of 29%, 9% net income margin, and free cash flow margin of 110. So this is definitely something that the company could achieve, and especially since last year they did 16% in the margins. And also their revenue seems to be increasing pretty nicely. So I wouldn't be surprised if the company actually achieves that. Yet I probably want to get at a little bit of a better price here. So I would think that I want to actually watch this company for a little while, see if it actually goes down a little bit lower, especially at this current market. It's very likely, I believe. And so if it goes something like maybe 35, 33 or something of that sort, which I feel could very, very easily happen actually again in this current market, then this could be a very interesting opportunity. Even now it could be an interesting opportunity, but I do want to get as better prices as possible right now, because there are so many discounts all around that it's best to use your money for the best company that you can buy right now. And with all this current massive downtrend right now, you can find so many nice companies that it's worth potentially waiting it out a little bit, wait for a better entry here. But looks like we're getting there again. Something near 35 could be very, very interesting here. And remember, we are opening up at about 43, 44, something of that sort tomorrow, maybe even less. We'll see. But let me know what you think about Upstart. It starts getting a little bit interesting here, doesn't it? Let me know with a comment below. It's about 80 to 82% down. Right now it's going to be more than 82% down. Absolutely, maybe 85 or something. Absolutely insane. So thank you for watching the video. I hope you did enjoy this one. Take a look at this other video that I made earlier, and in this one I'm discussing Alibaba, what's going on with the company. And thank you for watching this one again. Remember to like and subscribe, and if you want access to this tool, you can always become a Patreon. You can find all the links in the description box below this video, and I'd love to see you inside. See you as one of our Patreons. Thank you for the support, and I'd love to see you using our tool. And yeah, have an awesome day, and let's see what the market brings tomorrow. Thanks again for watching. See you soon. Bye bye.